What up, everyone? Welcome back to Financial Education and Business. So there is definitely major market risk that I did notice when I was looking at the Robinhood financials for Q2. Overall, the company's obviously been really busy reporting their earnings, trying to get out of this all these governmental violations and as well as lawsuits. Um, this is their Q2 financials for 2021. This is their net cumulative funded accounts. So over time, as you can see, from Q2 2020 to Q2 2021 has really grown year over year in a major way, as well as Q1 2021 to Q2. This is good to see. I've seen a couple of risks, but we're going to go through slowly, one sheet at a time until we get to the risks. So monthly active users have been growing positively, and asset under custody also has grown. So equity has really grown big, but also, as you can track right here, the cryptocurrency, which has also growing very significantly, especially between Q1 of 2020, quarter over quarter so far, but especially in Q2 of 2021, we've seen major growths in the assets under custody for cryptocurrency, while also decent growth for the equity section. Average revenue per user, here it is, which is gone down. I mean, this could be due to a lot of different things, right? Could be due to the cryptocurrency related, equity related, options related, but we will get to that. And this is a risk that I was talking about when it comes to the company, because the way they make their money is making half a penny on each transactions that everybody does, and if less people do transactions, there's major risk. So here we go. Total net revenue, it's definitely has been growing decently. So we have the transaction based on revenue, net revenue based on interest, and revenue based on other revenues on the top green. So that's decent. It's about about $33 million that they've grown Q1 to Q2. So total net revenue. So equity, as you can see, is kind of fluctuated, but decent. Between Q2 and Q3 of 2021, 2020 was kind of flat. Major decline, right, as you can see in Q2 of 2021, and also huge growth in the crypto market. And if they're able to keep that up, they're going to continue to do well. But if crypto has another bear market and nobody's really doing anything with crypto, then this could really hurt the company in the long run, because now this is becoming one of their main sources of revenue. And this is good or bad, right? They can add more cryptos to their platform, or they could or just continue just holding Doge, and then actually losing a lot of their investors to other crypto-based companies like Coinbase. But we'll see. That is going to be a major risk to see as the revenue grows in crypto, how they're going to adjust for that. So let's go on to expenses. So one thing you have to notice is their marketing expense. They have not really grown too much. I mean, right now, if you think about it, they're more of like word. People just talking about them. They're probably the most known crypto stock options margin exchange out there. They made commission-free trading, and it's very convenient as well. So operating expense, brokerage transaction base, as you can see, this gray has been kind of flat forever for the past year. Technology development, of course, major technology company. They're going to be a huge technology cost that's going on. Operations, paying everybody for work, wages, salaries, which is growing but not too significantly. But there is this significant growth in marketing as well. But I think over time they're not going to need to market because they're going to be so well known. General administration has decreased a little bit, as you can see, between Q1 and Q2. Major loss, but much better than Q1 in net income. So of course in Q2 they had a decent $58 million in net income. Q1 of 2021 on $1.4 billion in net income loss. And then, of course, a lot of lawsuits, a lot of issues the company is going through. And I don't think lawsuits are going to be the end of the company. It's just going to be something that's going to be ongoing for a startup company that is just trying to be a pioneer in so many new industries. So Q2 of 2021, they did take a loss of almost $500 million net income loss, which is a lot, but a lot, 50% plus less, almost 100% less than what they did previously in Q1. So this is good, but really bad if you compare year over year. Adjusted EBITDA. I think EBITDA is a good way to look at a technology company, to be honest, because it's just kind of earning before interest, tax, depreciation, and amortization. It's a good way to look at them because it's like the company's operated income without all the other depreciation and amortization expenses that are not real expenses but just more of accounting rules. So we do see here Q1 115 to $90 billion in Q2. That's a 16% drop, which is not really that good. We want to see adjusted EBITDA growth over time. Something that I did want to really point out is so asset under custody, as you can see, that equities have decently grown, options have also grown, and cryptocurrencies have grown almost 100% from Q1 to Q2. The risk that I keep going back to is their cryptocurrency and how that is the company's main, it's starting to become the company's main bread and butter. As you can see, their total net revenue, transaction-based revenue. Yes, options used to be the largest portion of the revenue, but recently cryptocurrency has really jumped a lot, like what, 4x, right? So it's up almost 3x, almost 300% increase in cryptocurrency transaction-based revenues. So if cryptocurrencies, and if they don't capture the market on cryptocurrency, and if they're not able to add more cryptos like ADA, XRP, Ethereum, Bitcoin, and allow other cryptocurrencies to be traded on the platform, I think people are just gonna leave to other companies like Coinbase, Voyager, big digital assets, and stuff like that. So I think that it would be good in the long term if they do go in that direction, but it's something that's going to be very important to look at because they do make their money through transactions, and they make pennies, half a penny on each transaction, and they don't make you pay commission. So if cryptocurrency goes down and their options trading, which was their main bread and butter on revenue, goes down, then they could really be hit, because already options has gone down year over year and equity has gone down in a major way year over year. So we're gonna have to watch that out. In total, they have grown their total transaction-based revenue, but mainly due to cryptocurrency transactions. So that is my biggest risk. They're transaction-based revenue company, and if the cryptocurrency is taking off and is becoming their main source of income, then they need to find a way to capitalize on that and make sure that the other markets like equity and options are not shifting too far from the center, but continue to grow over time. So that is my biggest red flag that I see. And as well as they still haven't resolved a lot of issues that are going on with being sued and everything like that. So still keep your eyes open for that kind of information. So Q2 financial statements were released. Their 10Q, the quarterly earnings. If you do have the time, go check it out. I did just summarize their presentations right here. I hope that did help. That's going to be very important to pay attention to that risk, there for the company. Thank you for joining me. I'll keep you updated on this and as well as other things. Bye.